Alright, let's break down NIO and why I think this is going a lot higher than where it's at. We're only going to focus on the monthly, the 2-month, and the 3-month chart. You're currently looking at the 3-month chart. Even if you peeked at the 6-month, there's not a lot of data. Like the tricks and the momentum don't show up just because there's just not enough time. So we got to start off with at least where we have the tricks. The first thing really is this candle that caught my attention. We completely broke through the upper quarterly band right here, and now we're pulling back. So I'm going to mark out the lower quarterly band down here, like so, and then we also have a trend comes right through here. The other thing you want to pay attention to is our tricks is green. It's way oversold, and our tricks actually turned green back here. As soon as we hit the trend for the first time, our tricks turned green. And that was back in April of 2025. So again, this is 3, 6, 9 months ago. So, when I look for trades, I'm playing on these high time frames. So a lot of times it takes quite a bit of time for this to play out. So from here, we can go ahead and mark out our targets. Since we do have higher closed highs, right? With higher lows creating. So we do have like a trend reversal, higher highs. Broken upper quarterly band, and now we're pulling back. So this level down here would be an entry, area of interest for entry around 383, which I'm actually already in this. I entered a little bit a little early, just small nibbles, but getting down into the 2-month, you can see again that back in July of this year we broke the upper 2-month band rather, and then the following 2-month candle also closed above our upper band, and then now we're getting a nice pullback. So the idea is whenever you see broken bands and you haven't seen the opposite one touched yet, and price starts to reverse, that's the area that we look for a test of. And if it's the first time, it means it's a high probability setup, especially on high time frames, to continue the trend that it's going in. So for instance, since we have a broken upper 2-month band here and here, and we're pulling down, this is first entry, and then we go back to the quarterly because it did it here on the quarterly as well, but our quarterly lower band is a little lower, so that's entry 2. So these bands are creating a natural little price zone right through here. So we're going to mark it out with a box right through here. And that's between 383 and 431. Okay, and then again, let's put our targets back on here. I didn't mark them out. Target would be the 127. That's the first breakout target. If we can break most recent highs, which I'll show you. 2-month again. Our tricks on the 2-month actually turn green back here at our basically second or third touch of structures. We touched it here and touched it here and touched it here. So right through this level, right in this zone, is a major support level. Kind of had a fake dip below it off that trend and then popped right above it. Broke the upper 2-month band, broke it again, like I said, now it's pulling back. Now from here, the other thing you can look at too is see how these lows are coming down. And if we go to our momentum, since we got enough momentum that started like right here, you can see how this is falling. Now momentum's raising. This is bullish divergence, which will be more pronounced when we get into the monthly chart, which I will show you here in a second. Let's go ahead and get into the monthly. You can see my first entry actually was off this lower monthly band here, right there. but you can see that we're actually starting to close below it. So likelihood is that we're going to go back down to this lower 2-month and 3-month band and possibly touch the trend again before we head back up this way. Some other confluences that that are kind of bullish here. Obviously this is our 3-month tricks turning green. This is our 2-month tricks turning green. In that time, the monthly has changed a couple times. We went green here, then we went red here, then we went green again, then we stayed green all the way to about here, went red again to about here, and then green again through here, and now red again through here. So the idea is, since the 2-month and 3-month are still green and strong, they don't react as much to the shorter term price action. Because this is going to update at the end of every 2 months, and then obviously the quarter updates every 3 months. And right now we have 17 days until the 2-month candle closes, and same with the 3-month. So we got about 17 days left of this month. So let's get these lines off of here. Back to bullish divergence. You can see, if we actually look at our momentum, you can see momentum's heading up here, and even from down here it's heading up, right? So if we close that and we just go off of this level here, we can see that it's heading down, and then this is heading up. That's bullish divergence. Same here. If you come back from the starting point of the low point of the momentum and correlate that to price bottoms have actually been falling as the momentum has been rising. So price falling, momentum rising, tricks also rising. This is bullish divergence. So another piece of confluence for you there. Downtrends. We have a downtrend. If we start here and go right through these tops, we have a test here, 3, 4, and then we finally broke it on the 5th test right there. So we broke out, made a new higher high above these highs, and then we're breaking the lower monthly band, which means we got 17 days to close. This could absolutely reverse from here and go up. We haven't closed yet. So just right now we're pushing through the lower monthly band, but we haven't closed below it yet. So that's a possibility. But I think we're going to get another dip down here, which I have another buy order in. And then if that does happen, we also would create, if we did start to reverse here, we would create an inverse head and shoulders. So you could technically say this is a left shoulder, this is a head, and this would be a right shoulder. So here is what I'm looking at. So if you entered equal amounts here and here, your average is going to be about the middle of those two lines between here and here. So if you get an average entry, we'll call it 450, which is about right there on the thick green line. So if you average 450, my stop would be about 348, about right in here, just below this trend and this low, which would be about 22%. Not a huge stop, but your gain, first target obviously is going to be most recent highs back to $8. Breakout extension levels, the 127 is here and the 161 is here. We also have the monthly coral coming in here, and then the monthly 50 SMA coming in here. So honestly, about 1050. It's coming at 1041, so we'll call it 1050. If you entered at 450 and you took partial 25% exit at most recent highs at the 77% gain, and then maybe take another 25% at that 10, we'll call it 1040 level to 130%. And if you take it to the coral, that's 173%, around 1235. And then if you go and hold it to the 1.61, it's a 222% gain, around 1450-ish or so. So I think over time, let's get back into the 2-month chart. I'm pretty confident over time, this falls down and then, pops up, maybe pops down, pops up, maybe overextends, pops down. Like, I think this could be a longer term reversal. But, you're looking at, 13 bars on 2 months. That's a little over 2 years. So, I plan on holding this trade for, I don't know. Like, I don't like to try to time the market. Like, it's hard telling. But, I think by, let's say, I'd like to exit this by April, into March, April. See what happens there. But yeah, that's my breakdown of NIO.